And let's get back to one of our top stories this morning on the corporate front. Stellantis expecting a net loss of 2.3 billion euros in the first half. The car maker saw global shipments fall 6% in the second quarter to 1.4 million units, with U.S. shipments down by a quarter. It said actions are being taken to improve performance and profitability, with new products expected to deliver larger benefits in the second half of the year. Let's take a quick check of the European auto space across Europe and see how it's faring. There we go. A bit of a mixed picture here. Volkswagen eking out a modest gain. Mercedes is down. BMW also up by just a tad. But Stellantis, the company in question, is off by 2.3%, suggesting that not all of this had been priced in. Charlotte joins us with more. The company has a new CEO, obviously. Seems like he's doing some kitchen sinking.
Yes, he was actually confirmed just yesterday at the EGM. So you remember the company suspended all their guidance back in April after multiple profit warning last year. And so now publishing this preliminary and unaudited financial information there to the market, that net loss of 2.3 billion euros. So they have 3.3 billion euros in restructuring costs, and also said that they forecast an initial hit of 0.3 billion euros from import tariffs. So they had lower shipments to North America, down 25% year on year. And you remember that they had a double whammy at Stellantis. First, the issues with their own strategy in North America, of course, the biggest profit pool for the company with their brands like Jeep or Ram or Dodge, where they increased production very aggressively after the pandemic. Therefore, ended up with a lot of inventory after hiking prices aggressively as well, when there was more demand than supply after the pandemic. And so they ended up with this whole inventory in North America, leading to a lot of to the profit warnings last year and the ousting of the CEO, Carlos Tavares. So now, on top of that, then the uncertainty around tariffs and the impact on their business was the extra shock for them. So remember, they post-production at 2 assembly plants in Canada, in Mexico, as well as some plants in the US that were supporting these 2 plants as well, to try to deal around the tariff uncertainty, the impact they could have on their business. So that's all this, the program for the new CEO, Antonio Filosa, who was already North America boss. Now he will be in charge of the whole company. Interesting that he will actually be based in the US, unlike his predecessors, they were based in Europe, in France. So the unions in Italy and France were actually not very happy about that. They clearly send a message of what the priority will be for the new boss of Stellantis. And they burned through 2.3 billion euros in cash in the first half. So certainly we know there's still a lot of uncertainty for the car makers. We saw with Renault last week that in Europe demand is slowing. We know they have the competition with the Chinese EVs. But of course with Stellantis have this double whammy of this exposure in the US, the wrong strategy that they had in that country, and now the tariff uncertainty on top of all this.
It's really interesting to hear about the leadership change in terms of location, that the new CEO is going to be based in the U.S. And we know that automakers, companies across sectors have been trying to curry favor with the U.S. administration in hopes of seeing some better tariff treatment. Doesn't seem to be the case yet in terms of the latest rhetoric coming out of Washington anyway, when it comes to Germany's push for carve-outs for the auto sector. Just in terms of the stock impact, if we have the year-to-date chart to bring up here on the screen, the stock is down about 38% year-to-date. It's only off about 2.5%. And I say only when, as Charlotte, you said, it's reported a loss of 2.3 billion euros in the first half of the year compared to 5.6 billion profit in the previous period. So that's a huge change. Is the stock only showing a modest reaction because it's already priced in a lot of this weakness?
I guess with the stock down almost 60% over the past 12 months, a lot of the bad news is priced in. But we're talking about companies hoping to get some hope with the Trump administration. Stellantis themselves, Mr. Elkann, the chair of the group, announced an investment of $5 billion in the US with President Trump, hoping at the time, a few months back, that they could get some favors around the question of tariffs. Of course, that didn't work out. Interestingly, just to go back to the management at Stellantis, the new CEO, when he was named, the shares dived a little bit at that point because it was an insider, and people thought, well, maybe an insider is not the best thing. And also he announced a management reshuffle overall with very few changes, and that again sent the shares lower because for a lot of investors there was no positive catalyst for improvement, given that there was a lot of insiders that were already in play at the company to potentially operate the turnaround at the group.